I'm Caroline Heide in for Emily Chang. This is Bloomberg Technology from London. Coming up, the tech sell-off goes global and investors blame the sector's biggest names. We'll analyse every turn of the worst 2 days in tech this year. Plus, Uber ousts its head of business. We've got the inside track on Emil Michael's surprise exit. And Mayor Sadiq Khan joins us at the launch of London Tech Week for a Bloomberg exclusive. Can the UK capital retain talent under the shadow of Brexit? First to our lead. Stocks continue to fall around the globe, led lower by tech shares. In Europe, the Stoxx 600's tech index had the biggest decline in almost a year since June 27th of 2016, and the slide continued in the United States. Some of the largest tech firms posted the biggest declines, including Apple, Netflix, Alphabet. Now, Bloomberg News Stocks reporter Oliver Rennick joins us from New York. Oliver, we're going to have a bit of a chart off here, I think, because I'm going to bring you my first one. I'm digging into the terminal. The audience at home can do it if they've got a Bloomberg in front of them. Go to #BTV, then type in 9317. I am looking, therefore, at the slump in European stocks, that, Oliver, down 3.6%. I'm looking at the slump in the US NASDAQ in the blue line here. We've seen the biggest two-day sell-off. Well, what, $230 billion of market value wiped off, down 2.3%. Asia's being hit as well. Big players, Netflix, Apple. I want to ask you what trends you're seeing, because this seems to be worldwide. It
is not too pretty, you're right, Carolyn. When you look at what happened overnight in Europe, we came in here to the US today, and we saw somewhat of a repeat of what happened on Friday. Now, selling paired off a little bit as the day went on here, but ultimately I think what happened here is it's an interesting event, because it's not just about technology, and it's not just about the fundamentals of these companies. It may not even be about that at all. I think what it is about is a reversal that is something very, very unique given how far some of these companies have gone in the past 6 months. Really, we had a first reversal in the equity market at the beginning of the year when all the Trump trades basically just stopped. Then we saw investors looking to growth. We saw investors looking for momentum, companies that had been doing well, and they built up a lot of that momentum over the past 6 months. And now that trade basically unwound. And it's not pretty, because it's taking down not just tech, but other companies as well that had done very well over the past 6 months. So a bit of this sort of factor type investing that a lot of people have been talking about, where you really invest in strategies more so than companies specifically. And that's kind of breaking down a little bit.
It is fascinating as to why the unwind suddenly starts right here, right now. Morgan Stanley, for example, saying, look, it's got further to go. Yeah. I'm interested as to whether we could see not just a correction here, Oliver, but actually a full-on bear market. This what seems to be actually what's being signalled. My next chart, I take you to the Bloomberg. I bring you #BTV. This time type in 6423 if you've got a Bloomberg at home. This one just shows how far we came, as you were just mentioning, before this turnaround. The S&P 500 technology stocks, we saw more than 40%, close to 50% of all of those tech stocks reaching 52-week highs. Yep. That is 1 year highs. We haven't seen that, Oliver, since 1995, since 1997. What happened after those 2 years? Down 20%. Are we about to see a bear market?
You're giving me a run for my money on the chart. These are good. I love that chart, actually. And I like it because that breadth really signals what has happened and to what degree. As you point out there, those 52-week highs, breadth kind of works in a funny way. Breadth is nice while it's working, and then it's very painful when it doesn't. In the tech sector in particular, as you point out, that type of breadth hasn't really happened that many times before. In fact, there's a lot of things that haven't really happened since we go back to the dot-com era. However, the counterpoint would be that even though some of these signals do look familiar, and when we take it back to much worse times, ultimately the fundamental picture is very different, and valuations are still very far below where they were going into the dot-com burst. There's also the issue that there really wasn't a lot of fundamental backing, I think, to the sell-off. If Apple had come out and said, hey, look, we don't see demand for our iPhones, we don't see demand for our products. Or AMD came out and said something similar. In fact, that wasn't really the case. It was just kind of a few things, I think, that coalesced into this moment in which people looked at the type of thematic investing that they've been doing and said, this doesn't really make sense. If we just jump in my terminal real quick, I'll kick it off with my charts, because this one I'm looking at is basically just breaking down the losses. In the white, we're looking at semiconductors. That's the SOX index. If we look at blue, we're looking at the growth index for the Russell 1000. If we look in the gray right next to it, momentum. The orange is just the straight up tech. Now that, I think, is telling us the specific sell-off that happened. Semiconductors hardest hit at the bottom there. Then you go up and you see where tech got hit. Then you can see the more sort of strategy-based investing, the momentum and growth also very badly hurt. But what's most interesting about this, I think, is the fact that at the end of the day, the S&P 500 only down about 20 bips over this entire period. For all those people that were fretting about concentration within the equity market, fretting about the FANG stocks, at the end of the day, they got hit pretty hard Friday, got hit hard pretty hard again today, and the market has been able to shrug it off. And I think that's very important of perhaps some underlying strength.
And we'll see whether the earnings, of course, building up towards them, whether they manage to be a supporting factor going into the next quarter. Brilliant reporting. Thank you very much for breaking it all down for us. Oliver Rennick, Bloomberg News stocks reporter from New York. Now, a big announcement ahead of the E3 gaming conference kicking off Tuesday. Microsoft is targeting hardcore gamers with its new version of the Xbox. The company calls the Xbox One X its smallest and most powerful video game console ever. It will be released November the 7th for $499. Now, the Xbox One X is designed to work with a new generation of 4K TV sets, as well as with games that offer more realistic scenes. And we'll be live at the E3 conference with Take-Two CEO Strauss Zelnick and Nintendo America's president Reggie Fils-Aimé. That's Wednesday, 5 p.m. New York, 2 p.m. San Francisco, and of course, 10 p.m. right here in London. Now, coming up, Uber ousts its senior vice president for business. That's Emil Michael, founder Travis Kalanick's closest confidant. Where Uber can go from here. And later in the show, our exclusive conversation with London Mayor Sadiq Khan on keeping innovation growing in the UK capital and his relationship with President Trump. This is Bloomberg.
The moment that Theresa May decided to invite Donald Trump on a state visit, the moment she decided to offer him a red carpet, I said it was wrong. Wrong for a number of reasons. Wrong because of his views in relation to a Muslim ban. Wrong because of him changing the long-standing, well-respected policy of the USA in relation to welcoming refugees and a whole host of policies and views that he has.
Now, after years of watching Silicon Valley innovators build peer-to-peer payment systems, Wall Street is ready to unveil its own answer. More than 30 banks are teaming up to form Zeller. It's a new peer-to-peer lending service and will soon offer it to about 86 million mobile banking customers. Now, Zeller is, of course, entering a crowded market, though, with competitors like Venmo, Apple Pay and, of course, Square. Meanwhile, Uber has decided to part ways with its head of business, Emil Michael. This after two internal probes revealed a series of misdeeds by employees. Michael joined Uber in 2013 and is CEO Travis Kalanick's closest confidant as the ride-hailing company. Now, the embattled ride-hailing giant held a 6-hour board meeting on Sunday to discuss a variety of issues, including workplace sexual harassment and even a possible leave of absence for CEO Travis Kalanick. Now, Bloomberg Technology's Eric Newcomer covers the company, has been breaking all this news for us, along with Nanette Heide, partner at Duane Morris from New York. Nanette practices corporate law for venture capital and tech firms. Welcome, both of you. Thank you for joining me. And Eric, first of all, give us the lowdown, because this all follows Eric Holder's report done into these series of scandals. Emil Michael leaving, a big deal?
Yeah, it's a huge deal. I mean, this is, Travis's top confidant, a great friend of his, and sort of the guy who helped the company raise more than $10 billion, strike a deal with Didi in China, and make partnerships with automakers like Daimler. So a hugely important executive, but who has been sort of a central figure in many of Uber's scandals. So it's a really big deal that the board came to this decision. And things overall at Uber are just crazy right now, with this report supposed to drop sometime tomorrow.
Crazy indeed. And meanwhile, it seems as though Emil Michael has fighting talk coming out saying that he blames weak board of directors, a lax internal legal team. Nanette, talk us through, as your expertise focuses on corporate governance, for example, is this the right sort of step to be taking? Should they, in fact, be pushing for Travis Kalanick, the CEO, to too be taking a leave of absence, if not longer?
Well, I think the personal issues that Travis has been facing certainly have been significant for him, and it may be a good time for him to step back. Unfortunately now, though, with the leaving of his right-hand man, you've got several open positions, and for these positions to remain open while he's taking a leave of absence would probably leave the management in a little bit of a turmoil, because there'll be nobody really steering the ship at the time.
Yeah, talk to us about these independent board members that are being called for by this Eric Holder report, Nanette. Just, it feels as though perhaps they're too hard to fill at the moment, getting yet more people into the board. How independent is it actually compared to perhaps other companies? Because we know a lot of founders and a lot of company leaders hold a lot of control when it comes to board level.
Correct. The dual structure for a control of a company has been around really since the 1920s. But it's recently become more prevalent at technology firms, especially out in Silicon Valley. So the way the dual structure works is that you have two different classes of stock per se. And one class of stock has significant voting rights, more so than the other class, or perhaps the other class has none. In the case of Uber, Uber's Class B common shares have a voting right of 10-1, and the Class A common shares, into which most of the preferred stock converts, only have a 1-to-1 share vote. So this gives significant power to those who hold Class B common shares. And the persons holding Class B common shares are the managers and Travis and those who were founders of the company way back when the company began.
So, Eric, you said this is a crazy time at Uber, and we're hearing from Nanette what could happen indeed if we're hearing they're being asked to have more independent board members. What about this potential to see Travis Kalanick step aside for some time being? Because we know he's under a lot of personal pressure as well. I mean, the poor man's just lost his mother.
Right. The funeral was on Friday in Los Angeles, so it's been a really hard time for him. Everything that we've seen sort of puts the decision to take a leave of absence on Travis's shoulders. He would need to decide himself. I think a big question, is just who would lead the company. We've reported that there could be a management committee of some of the top executives, but there isn't really sort of a key person that could take over. There's no chief operating officer. There's no chief financial officer. There's not. Yeah. So they just don't have a clear number two to take the reins.
Nanette, when you're advising the VC clients that you help represent, when we see such a company gearing up potentially, maybe not anytime soon, but in the foreseeable future, some sort of IPO, how crucial is it to ensure that we have clear corporate governance, that you have a cleaner than clean, whiter than white company, and how much does, therefore, Uber need to do? Well,
there's been some roads paved by Google, Facebook's, Zynga, etc., regarding this dual corporate structure. So this is not unusual, and the investors have seen it before. However, when you're guiding a company as to what to do, you want to make sure that everything is fair and equitable, and that you keep the concerns of the shareholders in mind when you're doing so. So with respect to Uber, what you'd want to see, as you said, is more independent directors join the board. All of the directors have fiduciary duties to the shareholders, and they must act in the best interest of the shareholders. So as you add more and more shareholders, as you add more and more independent directors, the actions at the board become more focused on actions that benefit the company as a whole. Now, that's not to say that the founders acting with these Class B common shares are not acting in the best interest of the company. And in fact, the argument has always been that allowing the founders to maintain control over their company will allow the company to continue with its vision and push forward on the business plan, which is the basis for why everyone's invested in the company in the first place. So it's a very delicate balance, but having more independent board members on the board is a very important step.
And we'll see how that continues to unfold as we get more news of the Eric Holder report, and be, of course, really well reported by Eric Newcomer, who's been completely across the story for us from Bloomberg Technology. Nanette, Heide, partner at Duane, thank you for illuminating us as to what is needed on the Board of Governance. Now, coming up, thousands of tech professionals are gathering in London for the launch of London Technology Week. The major hurdles facing this sector in the UK capital. That's next. And a feature I'd like to bring to your attention is our new interactive TV function. You can find it at TV Go on the Bloomberg. You can watch us live. If you miss an interview, you can go back to it. And you can send our producers a message, play along with the charts we bring you on air. This is the Bloomberg subscribers only, though, I'm afraid. Check it out. It's at TV Go. This is Bloomberg. Now, Democratic Representative Mike Quigley of Illinois introduced the Communications over Various Feeds Electronically for Engagement Act. Kind of mouthful. The legislation, which has the same acronym as an infamous Twitter typo sent by President Trump, seeks to classify presidential social media posts as presidential records. Now, if passed, the legislation would prevent a president from deleting tweets or other social media postings. And it's not the first time Representative Quigley has taken aim at President Trump through the legislative process. In March, he introduced the Making Access Records Available to Lead American Government Openness Act, and also known as the Mar-a-Lago, which is a nod to the president's private club retreat in Florida. You gotta laugh sometimes, seriously. Now, London Technology Week has officially kicked off. The tech extravaganza is touted as Europe's largest showcase of technology. Since its launch in 2014, London Tech Week has included more than 700 events and has welcomed a number of delegations from around the world. Joining us now to discuss is someone that is no stranger to the local scene. That's Russ Shaw, founder of Tech London Advocates. Previously, Russ was the chairman of the marketing group of Great Britain and was vice president and general manager of instant messaging app and video chat service Skype. Russ, we know each other well.
We do,
It's
Caroline.
great to have you here.
Nice to be here.
Tech London Advocates is, in fact, one of the founding partners of Tech Week. And just talk to us in this current political environment, just how important it is to ensure that we're showing ourselves off. Technology in London as a hub still exists and still gets talent.
Yes, well, I think, London Tech just continues to go from strength to strength in terms of the investment, the talent, the startups and scale-ups that are being created, which is fantastic. But we're also in an uncertain climate, with the recent general election, with some of the upcoming Brexit negotiations and questions around accessing talent all top of the agenda. So a week for celebration, really excited to kick off today. But some challenges that we have to address.
Those challenges, I mean, talk to us about the survey that you ran literally just after the election, and the key concern is getting talent into London.
That's right. So the day after the general election, we surveyed Tech London advocates, and we asked them a lot of questions around the Conservative Party's manifesto on immigration talent, things like a third-party sponsorship for visas, and the sentiment from the community is very strongly against this anti-immigration approach, really wanting to make sure that we get access to skilled migrants, whether it's from the EU or beyond. So I think a real wake-up call. I think we had something like 75% saying, look, they are unhappy with the current policies and they need to change.
And it's fascinating. That's the same sort of theory we were hearing from the Mayor of London when we spoke to him. He's worried about the immigration, for what it means for London.
That's right.
And just to note, there are about 4,000 Tech London advocates now?
We're just about to hit 5,000 in London, UK, and 50 countries around the world.
And what about the question of capital in London? Because having come back from Silicon Valley, that is often what is labelled at slightly less bigger pace here in London is that, yes, you've got the innovation, yes, you've got some really cool startups, but you don't just really have the foundation of cash to put into them, and they have to go over to the US, like TransferWise did, like Funding Circle, for money. Is that changing?
I think it is changing. Last month, I had a Tech London Advocates Investor Showcase, and so we brought together angels, VCs, private equity funds, corporate venturing arms to talk about what is the state of London tech in terms of investing? Where is this going with Article 50 being triggered? And I think there was cautious optimism. Look, we don't want to compare ourselves to Silicon Valley. They've been at it for decades. We're kind of 5 or 6 years into it. But we're seeing funds being raised. Atomica raised $750 million earlier this year. A couple of weeks ago, Draper Esprit, $160 million. Brent Hoberman just announced a $60 million fund. So the money's there. The big tech companies are investing. Look, it's still a challenge to raise money wherever you are and whatever stage you're in. But the money is there in London, and if you've got a great business, a good model, if you're a strong leader, you shouldn't have it so difficult to get that money.
I mean, I spoke to the CEO of Improbable today,
Yes.
who just, of course, managed to secure $500 million from
As you do,
SoftBank,
yes.
as you do. And he's got his headquarters resolutely here in London. Yes, he has branches in San Francisco, but he's not going to be moving anywhere anytime soon. But there is still that viewpoint that when you're an entrepreneur, that really, if you really want to make it, go over to Silicon Valley or move your headquarters. Do you think that still is at the viewpoint of entrepreneurs?
I think some still have that viewpoint, but I do think it's starting to change. And why is that changing? We've seen some really good exits here in London over the past few years, both from an M&A perspective, but also some good IPOs on the London Stock Exchange and on NASDAQ. So I think the message coming back is, look, 5-6 years ago, yeah, you had to go to Silicon Valley if you wanted to have a good exit, but not anymore. And I think that's a really encouraging signal. You know, we've also seen a couple of unicorns fail spectacularly, but yet London is still on track in terms of the investment, the capital, and the vibrancy of the community that you saw this morning.
Russ, you're going to be sticking with us. Russ Shaw, thank you very much indeed for digging into all of the London tech scene for us. It was founder of Tech London Advocates, and he's going to be discussing a little bit more with us about the tech scene. And of course, London Tech Week doesn't stop here. Our exclusive conversation with London Mayor Sadiq Khan is later this hour. Now, coming up, just 5 names account for nearly 75% of the drop in the NASDAQ the last 2 days. We'll discuss if it's time to change the rosy outlook for big cap tech after huge gains this year. And if you like Bloomberg News, check us out on the radio, why don't you? You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Maryland and Washington, D.C. are suing President Trump. They claim the president is violating the Constitution by accepting foreign payments through his businesses. Today's announcement joins a January lawsuit filed by a watchdog group in a New York federal court. UK Prime Minister Theresa May is telling fellow Tories, "I got us into this mess and I'm going to get us out of it." Her government faces heightened uncertainty following last week's disastrous general election results that cost the party its parliamentary majority. Police detained hundreds of anti-Kremlin protesters across Russia, including opposition leader Alexei Navalny. Navalny is Russia's most prominent opposition leader and a presidential hopeful, called on supporters to defy official refusals to permit those rallies. India's Prime Minister Narendra Modi will meet President Trump in Washington on June 26th. Mr. Trump said last month that India's participation in the Paris Climate Agreement was contingent on New Delhi receiving billions in foreign aid. Ties between Washington and New Delhi had prospered under the previous U.S. administration. Puerto Rico's governor is vowing to turn the U.S. territory into the 51st state. The island voted for statehood in a non-binding referendum, despite a boycott and low turnout that raised questions about the vote's legitimacy. The United States Congress must approve any changes to the island's political status. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. Monday here in Washington, D.C. Already 7:30 Tuesday morning in Sydney. We are joined by Bloomberg's Paul Allen. He's got a look at the markets. Paul, good morning.
Good morning, Elisa. Well, it is back to business here in Sydney. The ASX was closed on Monday, Australia time, for the Queen's birthday holiday. So trading resumes today, and it's the first chance for stocks locally to react to the significant tech sell-off that we've been seeing now into its second day across the US. Also here in Australia, we will have the business confidence survey a little bit later on. Now, in the context of that tech sell-off, keep an eye on NetDragon Websoft, listed in Hong Kong. Been a bit of a bumpy year for NetDragon. It will be out with first quarter earnings later today. This is an online internet games company, so it'll be interesting to see how the market reacts in the context of that tech sell-off. Nikkei futures also looking weaker. We'll have earnings today from the real estate plays Token and Sekisui House. That's some of what we're watching around the region today. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology from London. I'm Caroline Heide in for Emily Chang. Let's return to our top story, the sell-off of tech stocks. And at the heart of the recent market sell-off is pressure on big cap tech stocks that have previously seen massive gains in the market this year. Mark Mahaney is an analyst at RBC Capital Markets and covers some of the biggest tech firms, including Alphabet, Amazon, Netflix and Facebook. He joins us now from New York. Mark, always great to have you on the show. And first of all, I'm looking at a note that you put out back, what was it, May the 18th, saying valuations are more robust, saying that having climbed from 15 times to 17 times, they're more robust. Do you stand by that?
Yeah, so look, we've had, as you pointed out, a major rally in the sector, large cap consumer tech. I'm not including Apple, I'm not including Microsoft and Tesla, but there are other names that have obviously participated in this rally. But of kind of the big Internet four, what's called FANG, Facebook, Amazon, Netflix, Google, the stocks are up on average 30% year to date. What's also happened, though, are earnings estimates have largely risen, so the multiples haven't been that egregious, or they've ramped, but not dramatically. And then if you just step back, and I know the stocks are up a lot, what they also came up a lot from, though, was the Trump trade-off. And I remember you and I talked about this at the very beginning of the year. These stocks traded off, a hefty 5 to 10% at the end of last year on the Trump election. So there was a little bit of a false floor here on the stock, or a little bit of the rally may not be as strong as it appears to have been.
OK, and so do you think, therefore, like the likes of Morgan Stanley are saying, this fall-off has further to go? Should we expect more losses before we get any steadying in the market?
So, let's see, Caroline. I don't think we've had a fundamental catalyst that's taken the sector down. We haven't had some sort of new regulatory risk to the sector. We haven't seen any dramatic new competitive shifts. What we're seeing is portfolio positioning. Yes, that could absolutely take this sector down further. My point would simply be that if you look at the valuations for some of these names, you still have Facebook and Google trading at 23, 24 times earnings for what I think are secular, almost unrivaled growth. Facebook is doing close to 50% earnings growth, and Google has done consistently 20% earnings growth for about 7 years now. So I think valuations are still relatively reasonable. None of these are dramatic back up the truck entry points. But if the sell-off continues, we could have some dramatic opportunities here. They're not there yet.
Fascinating, because I'm looking at some of your current coverage, and you've got outperform on Amazon. You see it going to $1,100. You've got outperform on Facebook, as you're calling it, $185. Google, Alphabet, of course, which owns Google, also could have hit as high as $1,050. Netflix, I want to focus in on Netflix, because I've got analyst recommendations up on the Bloomberg for Netflix stock. And I'm still seeing at the moment a resolute sea of green. Most analysts are saying buy this stock. Only 3 are saying sell. But you've suddenly seen that move here on the yellow line, a sudden falling down in the price, but the price target remains now above it, at just above 160. Where do we see analysts starting to recalibrate if this move did take on a life of its own, or do you think, like yourself, they feel that there needs to be some more substantial catalyst for why we're seeing the sell-off, rather than perhaps profit taking?
Oh, I don't know. I've followed this for almost 20 years now, and there is a herd mentality out there with investors and with analysts. And I participated in that from time to time. I try not to, but there is this unfortunate reality of sometimes stocks move up and price targets move up, and then stocks move down and price targets move down. They really shouldn't, but that does happen. But fundamentally, we see upside to Netflix's stock, but none of these versus our price targets show material kind of 20% upside, with the exception of Facebook. That's our #1 pick in the space. Now, Netflix, what I do find interesting is if you look at the last 2 days of the sell-off of kind of the major FANG names, the stock that sold off the most is Netflix. And arguably there's rationale behind that, because it's got the least valuation floor. This doesn't trade at 20 times gap earnings. The multiple is much higher because this company is still deep in investment mode as they expand internationally. So it's not surprising. If you look at these names, you should expect the stocks to hold their prices the best in a tech sell-off. Would probably be Facebook and Google. That's certainly what happened today, about 1% trade-offs only. And the stocks that are with the least valuation supports, the Netflixes, will trade off 3-4%, which Netflix has done 2 days in a row. Expect more of that in the future.
The semiconductors, the chip makers, seem to really spark this, and then along came all the real tech giants behind it. Some of that seems to be more vindicated when you're looking at valuations of semiconductor makers, and a point made by GAM Holdings portfolio manager Mark Horton here in Europe. Do you agree with that? Have we got too heady when it comes to the semis?
Caroline, I'll steer away from that question. I apologize. I don't cover the semis sector that specifically. I'm at Duane at RBC does, so I won't comment on those.
Okay, so just lastly, therefore, how are we set for the rest of the week? Are we set for when do you think would be the right time to start seeing real opportunity to buy after this sell-off?
Okay, so you do have one event coming up in the middle of this week. The Fed Open Market Committee decision will occur at the end of end of the day on Wednesday, or at 2 o'clock on Wednesday Eastern time. So we'll then know what the rate decision is, and our guess is that most people wouldn't necessarily want to buy in front of that. So we may very well have a continued drift off or a trade-off in kind of the most popular, the best performing to date. We may have a reversal in some of those stocks for another day or two. Then we could maybe see a bounce back off just as we get that uncertainty over the rate decision out of the way. And then the next catalyst, of course, has to be earnings. Now, we're not going to get any major earnings news for about another month. So we could well be in a position here, if there's going to be a portfolio repositioning, where the large cap techs that have dramatically outperformed year to date could tread water, could trade sideways or trade off modestly between now, for the next month until we get into earnings news post, once we get a little more visibility on the rate decision.
So maybe rich pickings come the 15th, and then it's all about earnings. Mark Mahaney, analyst at RBC Capital Markets. Wonderful to have you with us as ever. Thank you very much indeed. Now, coming up, our exclusive interview with London Mayor Sadiq Khan. How he expects Brexit to impact the London tech scene. This is Bloomberg. Now, back to another top tech story for you. After a rocky few months, Uber is getting ready for a lot of changes. Uber head of business, Emil Michael, has parted ways with the ride-hailing company after the board recommended his removal. To get a global perspective, we're still with Russ, founder of Tech London Advocates and a member of several boards. You have just stepped down from being on the board of Dialog Semiconductors, big major player in the German tech scene. And yes. As, therefore, a man who knows the role and responsibility of board membership and corporate governance, what then of what's happening at Uber for you?
Well, they're in a very difficult period at the moment. I think they are starting to reach out and appoint some independent directors. So Wan Ling Martello from Nestle has just joined the board as an independent. Maybe they'll make one or two others. They're going to play a key role here, I think, in terms of helping to steer the ship. Where have the investors been? The investors have a lot of money at stake here, and we shouldn't be having trip up after trip up like this if they've been working with the management team, with Travis and with the others there. So it's a tricky time. I think they need some fresh voices to come in from a board position. I know that they're also making a couple of key hires in the management team. I think Francis Frey from Harvard Business School is coming in to focus.
Many very excited by him.
Yeah, I think, from a strategy point of view, I think that's great. That's what the company needs. It'll give a good shot in the arm to the team in terms of how do they get out of the situation and get on the front foot, because they've been on the back foot for way too long.
Does Travis Kalanick have to go?
I mean, part of me would hate to see him go because, he's been there from the beginning. He talked a few months ago about getting some leadership coaching after he had his rant that got captured on video. I hope he stays around to some degree, because when you lose the founder like that, I think it's really hard for the people in the business who've been there from day one, and so they will be disappointed.
Because you've been in this sort of situation yourself when you had to fill in for a CEO.
I came in, 12, 13 years ago, I came in as a later stage CEO for a mobile messaging startup, and the current CEO was doing a good job, but was just starting to get a bit out of his depths in terms of strategy, growing the business, and the investors wanted somebody to come in who could take it up to the next level. I think Uber's behind the curve on that, but that's what they need to be doing.
And give the global perspective here, because are we seeing an impact here in London in terms of brand, in terms of people wanting to use it? Are you, when you travel around to other Tech London Advocates in different countries, how does it impact it?
Well, I think Uber still is held in good esteem. People use it. The brand is somewhat tarnished after the 6 months, whether it's here or in other parts of the world, probably particularly so in the US. But that can be recovered if they turn things around, if they do some bold things. By and large, a lot of people use them and love them. So they are an important brand. Many of us want them to do well. So it is recoverable.
It is recoverable. Russ, great to have you with us.
Nice
Thank you very much for
Caroline.
spending so much time with us this evening. Founder of Tech London Advocates there. Now, London Tech Week is, of course, upon us. The 5-day event celebrating London's role as a leading global technology hub kicked off today, and the Mayor of London, Sadiq, has some big plans. In a Bloomberg exclusive, Khan told us on his vision for tech innovation in the city while addressing Brexit and, of course, his relationship with President Trump.
I'm really excited. It's the biggest London Tech Week ever. It's Europe's largest tech festival, and it shows the world that London is open to talent, innovation and entrepreneurs. Over the last year, since Brexit, we've had companies from Facebook to Google, Snapchat to Square announcing record investment in our city, which shows the confidence they have in London. But London Tech Week will see more than 300 events across London. It will see more than 55,000 visitors from across the globe coming to London because they recognise we are Europe's tech capital. I tell you what, we're on the shoulders of Silicon Valley and New York as well.
Talk to me about the vision you have for technology helping adapt London as a city, making it smarter.
Look, we're a smart city, but we've got to be smarter. We've got to use technology to help deal with issues from transport, sustainable transport, to how we deal with the issues of climate change, the causes and the effects, to the global disability hub, helping those who've got issues around disability to have access to better transport, to have access to better jobs, to access to better skills as a consequence of technology. And the great thing about London's always been our ability to attract talent, our ability to attract venture capitalists, our ability to join the dots. And the great thing about London Tech Week also is I've opened Plexel, which will be a massive connected business campus, the largest in Europe, making sure that we can help startups incubate, flourish and thrive. And it's really important for people around the world watching this to recognise the ecosystem we have here that will help you flourish and thrive.
Also, you're hiring new team members to be able to drive the digital focus forward.
Yeah, I've learned from other great cities across the world. I've seen what New York did in the past and other cities across the world, Chicago and others. And what I've advertised for is London's first ever Chief Digital Officer. Because what we need is a Chief Digital Officer whose focus is on making sure we're better connected, focused on making us smarter. How can we use open data to allow the private sector to pioneer? How can we make sure the local authorities across London are more savvy with providing public services using technology, which will be cheaper, but also it means bespoke services for consumers, for citizens, for Londoners. So we've got to learn from others. I'm a great believer in stealing well rather than inventing badly.
Why do you think the concerns surrounding Brexit haven't put off entrepreneurialism within London?
I think one of the things that I've sought to do post-Brexit is just to say 3 words that are really important: London is open. I don't want the world to think, because we voted to leave the EU, the country, that we're going to stop being open-minded, outward-looking, that somehow we'll change and become inward-focused, and the world must recognise that's not the case. London was the one region in England to vote to remain in the EU. We recognise the contributions that talent makes to our city, the contribution access to the single market makes, the contribution that 27 other countries made. One of the things I'm doing is negotiating with the government a different deal for London if we can. In the meantime, my message to the world is we're going to carry on being open to talent, to innovation, to entrepreneurs. One of the reasons why London is the greatest city in the world is over 1,000 years we've been open to people from all different backgrounds, open to different ideas. That's not going to change.
What sort of different deal would you want to see for London?
The key thing for us is to make sure the government recognises that we need a flexible immigration deal. So I appreciate and respect that people in other parts of the country voted to leave the EU. One of the reasons was concerns around immigration. So whether it's in their interests or not, parts of the country don't want immigration. Well, London voted to remain in the EU. We need immigration and talent, but also we want it as well. And the government's going to recognise that actually London contributes hugely to our country in terms of revenues raised, in terms of economic growth. And if they want us to carry on being the success story that we are, they've got to recognise we need to be able to continue to attract talent.
Able to do this in the current political environment that we find ourselves post-election?
Well, what I'm hoping is that Theresa May and the Cabinet recognise the results of last week's general election. The country has rejected a Tory extreme hard Brexit. The government has rejected the version of Brexit being put forward by Theresa May in her manifesto, and the government has got to recognise that, because otherwise they'll be forced with the consequences. The consequences aren't good for anybody. The consequences are businesses not choosing to come here, talent not choosing to come here, businesses choosing to leave, which is no good for the government, nor is it good for London.
And lastly, you were just inside referencing an old adage that was David Cameron's, that too many tweets maybe make a twit. Can you talk to us?
I get the polite version.
Polite version. What about that polite version of the relationship with Donald Trump?
Well, look, I mean, being the Maryland is a full-time job. I'm not sure, about other people's priorities. My priority is being the Maryland, and I still never got time to deal with tweets from Trump. My views on Donald Trump have been consistent. I mean, the moment that Theresa May decided to invite Donald Trump on a state visit, the moment she decided to offer him a red carpet, I said it was wrong. Wrong for a number of reasons. Wrong because of his views in relation to a Muslim ban. Wrong because of him changing the long-standing, well-respected policy of the USA in relation to welcoming refugees, and a whole host of policies and views that he has. And I said at the time that a red carpet wasn't the right thing to be rolled out for Donald Trump, and we'll wait and see what happens.
That was our exclusive interview with the Mayor of London, Sadiq Khan. Now, sticking with political affairs, UK Prime Minister Theresa May and French President Emmanuel Macron plan to lead a joint crackdown on tech companies that fail to remove terrorism-related content, including fines. Now, the move means that the UK government is considering the introduction of legislation to force internet giants such as Facebook, Google and Twitter to improve monitoring of extremism and hate content. Tackling Islamist extremism is a priority for both governments. Britain's election campaign was interrupted not by one but by two deadly attacks, both in Manchester and London, while more than 200 died in Paris and Nice in 2015 and 2016. Now, a quick programming note for you. We'll have a full coverage this Tuesday on Bloomberg Television and Radio of US Attorney General Jeff Sessions' testimony before Congress. Coverage begins at 2:30 p.m. Eastern. This is Bloomberg. Now let's bring you a top story in corporate news now. General Electric shares soared after the company announced that Jeff Immelt is stepping down as CEO amid activist pressure. Immelt will be replaced by John Flannery, ending a 16-year tenure in which he dramatically reshaped the manufacturing powerhouse. During a Facebook Live chat today, Flannery encouraged his staff to finish what his successor started.
We've got a track record we can be proud of. We've got a window on the future where we're going to be even better. We've got to build on our strengths. We've got to make sure we're also known as an execution company and deliver for all the constituents, including customers and employees, and especially shareholders. They own the company at the end of the day. And the employees, we're the vehicle to get there.
Now, just last month, we spoke to GE CFO Jeffrey Bornstein, who, with these changes, will become a vice chairman of the company. Here's what he had to say about the GE overall.
We're a global company. We serve global customers. We have a global workforce. And that's the company we are, and that's the company we're going to run.
Meantime, McDonald's is looking for summer help through, quote, Snapplications. Now, the company will use Snapchat, Spotify and Hulu to reach millennial workers starting tomorrow. McDonald's anticipates that more than half the hires will be between the ages of 16 to 24 years old. The fast food chain has some 14,000 locations in the US. And Amazon is considering selling cars in the UK, putting pressure on Europe's biggest auto websites. Now, according to people familiar with the matter, Amazon is trying to fill the gap as customers shift away from traditional dealerships. Amazon has been using Italy as a test market with limited sales of Fiat Chrysler models. And you can hear about rival Apple's outlook for the car market as we air yet more of our exclusive conversation with Apple CEO Tim Cook on Bloomberg Technology this Tuesday. We heard all about the HomePod and AR. Now we'll hear Tim Cook outlook for Apple's move into the auto sector and Apple's growth in China. Now that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Do check us out. It's at Bloomberg Tech TV. Weekdays, 5 p.m. New York, 2 p.m. San Francisco, 10 p.m. right here in London. That's all for now. This is Bloomberg.